Hey everybody, Boris. Welcome to the weekly technicals for Aussie dollar, dollar CAD, and Kiwi dollar for Feb 13th to 17th, 2017. And I think the interesting story in the COM dollar trade is just the kind of a stealth rally that most of them have had. This is definitely very uneven, and we're going to discuss this in crosses much more. But especially on the Aussie side, the move in the Aussie is really tremendous. We're going to take a look at it technically in just a second. And I think a lot of it is being driven primarily by the return of the carry trade. The idea here basically is that if U.S. yields remain low. You know, the whole Trump trade rally was all about U.S. yields rising, which of course created massive outflow from Aussie and Kiwi as those yields became much less attractive on a relative basis. But if U.S. yields kind of have hit a top and are starting to now retrace back down, it makes short-term money in Aussie, short-term money in Kiwi much more attractive. And to that end, makes both of those currencies, I think, a very interesting carry trade redux, as we can see. The levels pretty much remain the same from this week to last week, although what's interesting on the Aussie is this very, very tight 76, 77 level. We're going to take a look at the charts here. And the CAD with 130 being a very, very robust support, which could go, if that goes, that could be a very interesting trade as well. The weakest part of all is the Kiwi. You can see that on the charts in just 1 second. Let's just take a look at the charts actually and see exactly what I mean. We start with the strongest of all. The Aussie by far has one of the best looking charts you've seen in a long time. This kind of a V-shaped recovery, very rare, very powerful. And I've been saying for a long time that once we clear the 75, it's been pretty much off to the races in a very slow fashion. This is a really kind of a slow grind. We're talking about 30, 40 points a day, up and back, up and back. It's not the kind of Aussie of the old when we used to do 100 points a day without hesitation. It's much lower. I think the average daily range now is 50 points. It's a very, very quiet, really non-eventful kind of a trade, but it's slowly, surely very much to the upside. It's very clear that we're now coming up against this really important. Actually, I want to go back on a much longer time. Let's just even go to a year. You can see the 77 is a quadruple top formation here. And if we start busting out through the 77s, it really puts us very much on path towards the 78, the much longer, the really, really big swing high at the 78 level. And would create a massive kind of a, bottoming out formation in the Aussie that puts us on a much longer term favorable path. For now, the break above the 77 here looks quite good, and if that takes us out, I think the race towards 78 becomes a much clearer and much more obvious trade as we go forward. As far as support goes, 76 near-term support, 75 still very much what was former resistance now becomes clearly the big support here to the downside, and probably would command a buy anywhere 75.50 to 75 for a potential bounce back up if we get any kind of a retrace. But really the story here is very simple. It's just basically the carry trade story. If Yellen doesn't really provide support for U.S. yields this week, the flow to the Aussie could really increase, and we could see a bust through the 77 towards the 78 level as the week continues. Now, the Kiwi, on the other hand, is a much weaker story because the RBNZ really beat the living daylights out of the Kiwi this week with a jawboning on the fact the currency was too strong, the fact that they were, relatively, I can't even say that they were relatively dovish. They were sort of neutral, that they remained neutral in their stance, and they actually raised their OCR target by about 10 basis points going out. So it was really much more the jawboning impact that took the Aussie to the downside, which, by the way, suggests that maybe this sell-off here, since it's not really fundamentally driven, could be an interesting value opportunity around the 71 level, but technically it just looks horrible. And the fact that what makes it looks even worse is the fact that it's a failure, triple top failure here at lower levels, suggesting that they could, on a relative basis, certainly it should outperform or underperform, I'm sorry, for quite a while. 71 is the near-term support. 73 is going to become a much harsher resistance points here. On the other hand, if somehow Kiwi manages to basically destroy the doubters, and if it basically turns itself around and surprise the doubters here, the break above 74 would turn this into a much more bullish construct. So for now, you have to give it the benefit of the doubt that it's a relative weakness story. But a big turn here through 74s would completely change the whole dynamic and the whole sentiment in the trade, and really puts us in a much more favorable trade. Because overall, it's still very much a bottoming out formation. But the correction this week was pretty brutal, and you kind of have to give it a lot of weight for the time being because the sentiment certainly is against it. And then last but not least is story of its own way as usual. Dollar CAD getting boost from the fact that oil staying above 50 for now, staying around this 130 level. This 130 level is very key support. If we get negative dollar flows, meaning U.S. yields to compress a little further, we could break down below this 130 level. But CAD is really its own story, and I don't see too much downward movement here beyond the 130. If it does break 130, it certainly opens up the run towards the 129, but still, this whole area is a very, very big support area. I find it very hard trying to sell down into the lows over here. The top side here, 32. If the dollar gets a strong boost, on the other hand, I think we take out the 132s and we could really make a run towards the 133s. It would really completely change this whole thing into a bottoming formation. It's neither here nor there in many ways on the caddy. The strongest story from a yield perspective is the Aussie. That would be the pro anti-dollar trade. Also, the fact that we have relatively positive Chinese data last week with the trade balance coming in better than expected. CPI data out of China could be supportive as well. All of those things. We don't have any real significant economic data this week out of any of the calm dollar countries. The story, by the way, actually in Canada, one thing I forgot, the Canadian employment data was really, really good, and that's one thing that is positive. I mean, you hear my own hesitation. I probably should not be trading my own biases. What the technicals are telling you clearly is that the caddy is a buy, dollar CAD is a sell. And if you sort of look at the technicals and just take away all your prejudices and biases, you kind of have to just close your eyes and trust the fact that it's a sell here down to the 130 and maybe down lower. I just find it really hard selling against this 130 support level. But that's actually my own prejudice speaking. When you look at the chart here, you sort of have to trust the fact that the sentiment here is to the downside, and the move could easily go to the downside as we go. Anyways, calm dollars look good. If the dollar story does not get any kind of a support out of Yellen, they could look even better as the week progresses. Wish you guys the best of luck, the best of trading. Boris Schlossberg, over and out.